Hi everyone. I wanted to make this video breaking down the trade I did on Nasdaq short, and I think this trade was very interesting in terms of studying liquidity and understanding which liquidity pool is stronger compared to an opposing side of liquidity. So if we compare buy side and sell side, which one is stronger and where price is likely to be drawn towards. And this also, hopefully this will also answer some questions I get that as a short-term trader scalper, I don't always need to know the daily bias to form a trade. I can work with a lower time frames like a 5 or 1 minute chart within the scope of one session, a few hours, and form a trade. So well, I should have, honestly, I wish I have held some partials, because yeah, this was a nice also price just tagged the relative equal lows here. Anyway, so this was our new day Asian session range, right? So we had on the 15-minute chart, this looks like a big mess. The AM session really was pretty sloppy. It was hard to trade. I mean, look at this. This is nothing. There's nothing here. No imbalances, nothing that's stands out to take a short. Really, 5-minute chart also looks pretty ugly. So I was working with the 1-minute chart, and again, this is like one of those days which is difficult to trade, especially if you're a new trader. And really, if you look at this sale, it is really a bunch of consolidation, back and forth, and finally price broke to the downside. So I shared this on Telegram, the trade I took. Like, I shorted inside this FEG here and I exited below this low. This was a 3-hour trade. We'll get to it in a moment. But I was really working with just this amount of data around this. So when we were around here, this is what I was working with. This was enough for me, all right? So I saw all this price action. I saw how this basically 9:30 opening, wick below these lows, and price started going higher. And then we created, so this low was important because we saw a strong reaction towards the upside from this low. And then there was another low that created the same strong reaction to the upside. And if you compare, and you also have, so let me just mark this, so those were relative equal lows, and you also have these highs here, relative equal highs, right? Well, really equal highs here. So why did I take this short? Because it really is, I guess this comes with understand more advanced, the more time you spend on the charts, the more experience you get. This comes with time, how you can interpret liquidity pools in terms of strengths. So why was I shorting here and not thinking that, okay, price dropped below this low, so we should be buying above these highs, right? So I want you to think that different liquidity pools have a different, well, if you think of them as magnets for price to be drawn towards, right? So let's say this buy side here was a much weaker magnet than this sell side here. This was a much bigger, larger, stronger magnet for price to be drawn towards. And why is that? Is because, again, time and price. So like I mentioned previously, we had those huge runs up from these lows. So this was a significant low. And then it took, look, so this happened in 10:15 and this low happened at 11:04, so roughly 50 minutes. So it took about almost an hour to create this pool of liquidity. And so very strong pool of liquidity. It took an hour to create it, right? And if we compare these highs, we can see that there was only a shallow retracement from this high, and it took about 18, so like 22 minutes to create these highs. So again, it took less time to create this pool of liquidity here, the buy side, and the retracement was really shallow. It wasn't as significant, and we were just consolidating for 20 minutes. So in my mind, I like, okay, so because I see this immediately stands out to me, and I see the element of time that it took almost an hour to create this important liquidity pool. I'm thinking, okay, we don't need to revisit when I'm going short here. We don't need to revisit this area because this high also kind of took out this high. This high was important because, again, price dropped significantly, right? So this high was important. It did take it out. Did it take out this high also? Yeah, oh, it did. So it took out this high and by a little bit this high too. So um, creating this relative equal highs, right? And so again, my thought process is that, okay, we took out these highs, and this pool of liquidity is much stronger in my eyes than these highs. So I'm not looking at price when it drops down below this low here, that it's just dropping down to go higher. No, I want to sell short inside the imbalance. And really the entry was based on the Inception model, because look, if you look at the left, and if we want to short, we focus mostly on the sell side imbalances. So we're looking at the downwards candles, right, that created the sell side imbalance, and the opposite goes to the buy side. If we want to go long, we'll look for bullish candles that created imbalances, overlapping imbalances, right? So this was enough for me. This was the Inception trading model that I introduced on YouTube to form a trade. And if you look at it also, we had an imbalance here too. These two did overlap. It did not quite overlap with this one, pretty close, but not really. But you can see that price on this candle did reach a little bit higher, and then, you know, and here too, and then finally we started dropping. But these two imbalances were enough for me. And let me actually take this off for a second. Speaking of imbalances, you might consider, so why am I not looking at this one? Again, just to reiterate, it's all about premium and discount, right? So if we look from this price fractal, from this swing high to this low, this imbalance was below the equilibrium, 50%, right? So I'm not interested in this imbalance and going short. But this imbalance, let's say, and you can use really this high to this low, or you can use this high that started the run. This is debatable which high you can use, but you know, difference is not as huge really. But you can see that obviously this imbalance that I outlined, this was in a premium, and the same goes for this imbalance. So this was in a premium also, right? So this is an important imbalance. And this imbalance, well, this was a little bit tricky, but again, I trusted the overlapping imbalances. And if we go this swing high to this swing low, we can see that basically half of the imbalance was below the 50% and half of it was above the equilibrium. So for me, this was enough. This was enough to form a trade. As long as this is even a little bit above equilibrium, you know, I shorted, I think, after this candle, like, so I waited for this, and I saw this kind of rejection, sort of, I shorted here. Actually, let me check quickly where exactly was my entry. So this was a 3-hour trade. Yeah, so the moment it was going down, I shorted it. This was the sell about right here, and my stop was just 20 points about here, right here. And so I gave myself room to be wrong, but again, we're only talking about 20 points. And my understanding was that we don't have to, price does not need to revisit this area. It's drawn towards a much larger magnet, which is the sell side liquidity pool. And this was also kind of choppy, came back. I almost moved my stop loss to break even after this low took out this low took out this low. Almost did it, and this is what saved me from being taken out of break even. Didn't do it though, because but the moment I saw it, price was here, so I'm like, okay, let me see what you know, what's gonna do. So I waited again, and finally price dropped, so I moved my stop loss to break even after this low took out this low. So this is already a risk-free trade. And yeah, so this was our low resistance liquidity run. I took my 3-hour trade. If we go back again, so it's our 3-hour trade around here. So somewhere here, yeah, I just collapsed the trades for a 3-hour. So this was a little bit messy, of course, but you know, where's the risk? Because I trusted my understanding of liquidity and the Inception model. Now, I think this exercise is very interesting to, again, if you look on the, you'll see a lot of this stuff happening on the 1-minute chart. And you can apply the same logic to high time frames too. If you see, if this was, let's say, a 50-minute chart, right, and you saw that, so this can take basically a few days to develop. This could be like a low on Monday, low on Tuesday, and these lows were maybe, you know, a low on the same day, or low on Wednesday, a high on Wednesday and a high on Thursday, something to that effect. So this pool of liquidity will be, because it took much longer to develop, it's more significant than this pool of liquidity. And that's how you can navigate these environments. And then you just, the entry model is, you know, whatever you prefer. It can be my model or the model Michael teaches on YouTube, or whatever. You can come up with your own model eventually as time goes on. It doesn't really matter. Whatever works for you, whatever you think is feasible for an entry, you work with that. And this is the case where I really wished I held a little bit of partials, because price did drop pretty fast below these lows too, but I didn't, and that's okay. You know, I was satisfied. I got my 3R, and that was my trade for the day. So hopefully, again, this answers questions like, oh, do you really always need the daily bias? No, you can work with the just a few hours on the 1 minute, 5 minute chart. And again, an important exercise in understanding which of forming the bias in terms of which liquidity price is going to target first. You have to think about it again in terms of time and price, as to how long it takes to form certain liquidity pools as opposed to the other ones. And usually that can give you a clue as to where price wants to go to if we see it just, you know, consolidating. So if you're a new trader, this was a difficult trade. It's really kind of 50-50. But with experience, you'll start noticing things like that, and even more stuff that can help you navigate these low probability environments. And the only thing is that, obviously, since the conditions are not perfect for a setup, you just go on a smaller, if you do want to trade, you go on a smaller position size if you trade with live funds, or if you execute on a demo, just go on a lower position size, you know, maybe half of what you usually go. But this was hopefully insightful and short and sweet video, just to show you how I navigate certain environments. And then yeah, I'll talk to you next time. Let me know what you think in the comments, if this is helpful at all. And I just encourage you to go back test, see on your charts, open up any asset class. It can be forex, can be indices, can be gold, and see for yourself if the things that I'm talking about make sense or not. Okay, so until next time, take care.